Welcome to Lockbox, a podcast providing real estate professionals with action items for success. My name is Jeffrey Brogger, and I'm going to be your host. I'm the founder of two real estate marketing and tech companies, STEEZY.Digital and realnurture.io. In this podcast, you'll learn from top 1% real estate and mortgage brokers the exact secrets to their success. Welcome to Lockbox. Welcome to Lockbox. My name is Jeffrey Brogger, and I'm here today with Bryon Enriquez. Bryon, thanks for being with us.
Hey, thanks for having me.
Absolutely. So kick it off. Tell our listeners who you are and where you're from.
Bryon Enriquez with a group called JSS Financial out here in the West Coast out of Calabasas, California. Been out here, born and raised, an LA kid. It's one of the few people that can say born and raised in Los Angeles. Been out here my whole life.
Yep. A lot of transplants, as we call them in California, where many people from all over the world move to Southern California, right? So to actually be a local, I remember growing up in San Diego and people would be like, oh, where are you from? I'm like, yeah, I'm from here. They're like, no, where are you really from?
I'm like, you know what? I get that. I get that all the time. We spend a lot of time in downtown Los Angeles also. Have a little place there. And it's everybody you meet. It's, where are you from? Oh, I'm from LA.
They say LA because they've been there for 10 years or 15 years.
That's exactly it.
Where'd you grow up?
Yes, exactly.
Yeah. So yeah, I totally get that. And I'm just about an hour south of you here, maybe an hour and a half in Huntington Beach right now. So what got you into the real estate industry in the first place? What was your first exposure to, real estate, lending, just the whole game?
So that's a pretty loaded question, and I hope you have a couple hours here to get to it. But no, I'll keep it short and sweet. So I'll rewind to my childhood. I was 12, 13, 14 years old, come from immigrant parents. They, first generation here in the United States, where English was their second language, and they spoke English and they had jobs and did all the right things. But yet when it came to like financial matters, and this is, back in the 80s, loan documents and everything were not in Spanish. So I remember being 13, 14 years old, and my dad asking me to help him read some of these loan docs. And here I am, 13-year-old kid. Doesn't know anything about, really what I'm reading, but somehow it intrigued me. And I would read loan docs to him and kind of explain the process of at least what I could understand. And it made an impact. And I never really made much of it, right? Fast forward, probably 7-8 years. I'm in school. I went to Cal State Los Angeles, studying finance and econ, and had a lot of family. I had a couple cousins, older cousins, who were in real estate. And I remember just somebody said, hey, you probably should get your real estate license. And it was just kind of one of those things. So I did. Went out, got my real estate license. All the while, I'm a foreign exchange trader. I'm working in the banks and doing the finance gig. And that's my thing, right? I'm just like, I like to say, I'm a self-proclaimed nerd, finance nerd and numbers. And that's just what I do. When I got my real estate license, decided, hey, I'm going to go work for a brokerage and sell houses. Didn't know a thing about the business, what I was doing. Went out and sold maybe 1 or 2 homes. And I came back and I was like, I'm never doing this again. It was not for me. It was just
How old were you at that point?
I want to say maybe 19, 20 years old.
All right.
Maybe 21.
Yeah.
First of all, I had never owned a home myself, right? I knew finance, but didn't really know the concept behind real estate and what attracts people to certain property types and all that stuff where, the good realtors know what they're doing. It was not me whatsoever. And I realized that was not for me. In my whole life, right around there, I realized I had a mentor, an older gentleman who was in commercial real estate. I met him at a coffee shop. It wasn't anything profound. There wasn't anything set up through an organization. It was nothing. It was just some gentleman that I met at a coffee shop that I would go to, and he would hang out there, and we got to talking one day, we became friends. He was a commercial realtor out in Glendale, just was doing ton of business. And I told him, and I said, look, I got my real estate license, not for me. And he kind of looked at me and he's like, you have a finance background. Why are you not doing mortgages? And a light bulb went off, and I was like, okay, that makes sense. So,
yep.
Started looking for a job at the time. I have a newborn baby at home, literally 3 months old. I have a decent job, working at a bank, foreign exchange trader, working not bankers hours because I'm working at 5 to 3, 5 in the morning to 3 in the afternoon, kind of crazy bankers hours. And I decided to take a leap into a commission only mortgage sales job with no mortgage experience, no sales experience, no nothing. And I said, I'm going to do it. And been doing it for 20 years now.
Awesome. Great story. I really like the beginning when you were translating mortgage loan documents for your parents at 13, 14.
You know what? It's funny. And it's like, it never really made an impact until years later, looking back. And my dad made a comment once. And when I got in the business, and he goes, hey, do you remember when you used to, go through the documents? I mean, I was like, you know what? You're right. I did.
Right.
And he's like, and I remember you like just turning pages and trying to read more. And I was like, oh, okay. Yeah. So it kind of all started making a little bit of sense.
Yeah. You're like, that's why I'm doing this now.
You're the one who messed me up a long time ago.
That's right. So now you've been doing, mortgage and it seems like now capital, but you've been doing, lending for about 20 years. So I'm curious to hear kind of where you're at in transaction volume, today. And then I have some follow-up questions based on that.
Okay. So that was good. So, and then I'll kind of fill in a couple of the gaps because there's been a big turn of events that have kind of happened in the last 20 years, me being in the business, started my first mortgage company at 24, killing it. I mean, doing 65 transactions a month, doing, 30, 40, $50 million in business every month. This was in, 06, 07 market crashes. I'm completely destitute, say, you know what, I'm never doing this again. Lost. I owed on my warehouse line probably $30 million and trying to figure out, how am I going to get this money to pay people back and all this, and I figured I was never going to do it again. But somehow I got dragged back in, went back into it, started working at the corporate level, kind of built myself up on the corporate side of it. So I worked for the banks. I ran a whole credit union, mortgage department, and I kind of did this thing where, I kind of refined my skills a little bit, I think, and I kind of eventually I decided I was like, you know what, I've been tired of building for other people and I'm going to try to take the leap and build for myself, which I did. Now we're lending. We've been doing this now with our own institution for about 5-6 years now. Where we started doing all the residential stuff. We start doing your transactional stuff. In the last 2 years, we've transitioned more into the private money world, where some people call it hard money. I don't like to use that term per se, right? It has a kind of negative connotation to it a little bit. But we do the outside the box lending. We do, the lending that, what I like to say is we do the loans that nobody likes to touch, right? And I always find a home. And that's based off of 20 years of relationships that I've built with investors, hedge funds, family offices, that we can rely on their capital to be able to lend out.
Awesome. Yeah, I love that. And it's definitely needed nowadays. I think that self-employed persons with high income are one of the biggest opportunities for lenders because ever since the crash, there's been much stricter regulation around proving your income. And, for example, nowadays as a business owner, I make more money than ever before, but it's hard to get approved for anything because, you're a pass-through entity with, you're writing stuff off against the business and you can do that. So you limit your taxation, but then it's almost like you have to overpay on taxes for a couple of years just to prove that, hey, I'm credit worthy.
And that's it. And that's exactly, that's exactly it, and that's, my career has always been based, my, high net worth individuals when I was doing, just regular residential loans. And I kind of saw that there was a niche, there was a market, a very underserved market. And at the time, like you said, after the crash, nobody wanted to touch those loans, right? There was nobody, and there was only the hard money guys out there that would, and then again, the hard money was kind of a scary place to go. So we've created this organization where, we like to call ourselves, very red carpet, very concierge service, because we speak to our borrower, our customer, and build that relationship and find out exactly what it is that they need. And then we can go to different funds and we can go and we put together these packages for them where it makes more sense, right? If it's they're self-employed, if they're an investor, they're looking to flip properties, we can finance development projects. We can finance, we do some here in California. There's some really, really high-end properties. We're involved in, $45, $50 million transactions. Out in the Hollywood Hills, Beverly Hills, Malibu, we do some of those real cool, fun properties those are the properties that get me out of bed. When you walk a, 20,000 square foot property with, 17 bedrooms and 15 bathrooms, it's kind of a cool thing to look at every once in a while.
Yeah, no, absolutely. Makes total sense. And that is exciting. So I would love to run through a scenario with you because for myself on the commercial multifamily sales side, I'm always putting deals together and it's great to make another lending contact, especially ones that are open to flips and looking at things from an investment standpoint. So I'd love to give you an example and kind of run through what that would look like from the lending point of view on your end, if you're okay with that.
Of course, yeah.
Cool. So I have a 6-unit off-market deal in Huntington Beach. It is 5 2-bed, 1-baths, and then there's actually a single-family home on the front of the lot. It's a 3-2. And, decent cash flow. Basically, they've had Section 8 renters for like 20 years. They just haven't had to renovate it, and they never want to leave. And so it's actually like close to market rent, even though there's about 20 years of deferred maintenance.
Wow. Okay.
And right next door, there's 2 new fourplexes, 3 stories high, and this one is only 2 stories, garage underneath, and then living on top for the 5 units. I see huge potential, and it's already zoned to have, double the amount of units on it, and going up a story and doing a major type of, kick all the people out or find them other housing, and then like totally work on this thing for 6 months and do a 12-month flip where we double the amount of units. And so with something like that, the owner wants 2.8, and then doing all the metrics and everything, building it all in, I think that, probably would need like, I don't know, 3.2 to make it happen.
3.2 on top of the 2.8 to purchase the existing property, right?
No. So I'm thinking it would be maybe, I don't know, 400,000, 500,000 for the renovation. And
wow.
Maybe
really? Only, okay.
Yeah. And maybe I'm undercutting that, but I'm just thinking as a hypothetical. Let's round up. Okay. Let's go to 3.5. So now we have 700,000 in the renovation budget. What kind of loan product would you offer for something like that?
So on something like that, what we'll do is that's a great scenario actually, because we do a lot of that. We can tailor something like that where, as you know, here in California, other states, but here in California, that's the game right now for the developers. The guys who are smart and are flipping, and there's a lot of guys who are flipping, right? Now the guys who are taking it to phase 2 is they're going up in units. Right. Yep. Since we've been allowed here in California to add ADUs or a secondary ADU, or a lot of the properties that are getting rezoned and allowed for multi-units, that's what's hot right now with a lot of developers, right? We're seeing a ton of that. So on something like that, what we'll do is we'll usually do a calculation based off of your cost. We'll do the acquisition cost, your soft costs, hard costs, permits, fees, anything you need to pay. So we'll add all that up, and we'll usually lend you up to 80% of loan to cost. So not just based off of the value, we'll go off of what the expenses are going to be for the property,
including construction, permits, everything.
Correct. Yeah, on something like that, I mean, on a smaller type flips where it's paint, carpet, things of that nature, we don't need permits, right? If you're building up or you're adding units or you're adding, square footage, and now we need a contractor, we need license, we need insurance, and we need permits, definitely.
Yep, absolutely. And so that's really interesting that you would do loan to cost, not loan to current value, which is, I do think it's kind of a flawed way to look at it. It's more of a personal residence way to look at it rather than an investor way to look at it.
And that's exactly it. We're reviewing it as a business opportunity, right? So we know that using that money and adding value to the property, now it's not 2.8 or whatever the purchase price was. Now it's probably a $4 to $5 million property, right? Because now we're talking about 8 units. So, and there's a back end calculation that we do, which is based off of the future value also, right? So we do 80% loan to cost cannot exceed 70% loan to future value, right? So there's a little back end calculation that we'll do in there to make sure that what we're investing in it is going to create enough value that we're still under certain thresholds in the future based off of what the property will be once complete.
Right. And it's breaking down to be about $470,000 per door now. So then if we added, like you said, 3 units, so now it went from 6 to 9.
Exactly.
That after repair value on that same valuation per door would be $4.2 million. And I think that 20 years of deferred maintenance compared to brand new flip plus 3 units is going to get closer to 500,000 per door, right? So then it goes up to like $5 million valuation, right?
Correct, right? Because you're not just adding the doors, but you're also cleaning up the deferred maintenance, making the property look nice and pretty, right? So now that's an attractive property that somebody wants to get into.
Yeah.
Yeah.
Yeah. Very interesting that you're open to look at it that way, that look at the really business opportunity and investment angle. Love
Oh
that.
no, yeah. So most of the people that I partner with, that we that we raise our funds through, are big investment companies, hedge funds, and whatnot. And a lot of these guys are all developers, right? So, or they have been at some point, or they're always looking for also development opportunities. So they understand that process. They understand the capital stack. They understand what we're doing, to get us to a certain destination, right? We just did, a 25 condo unit out in Oakland, right, ground up. Right. Where it was like the borrower approached us with, was like, she was like, hey, look, I own raw dirt, but I know I can build 25 units. And she had, the business plan and the financials, and says, my exit, it's what I'm going to get for this property afterwards. It's so much more. There's a lot of value in there. We're willing to go in there. And a lot of times like that, on situations like that, we'll even partner with someone where we'll say, look, not only give you the capital, but we also have the know-how, the resources to be able to partner with you, to be able to go down the road to make sure that this project is completed thoroughly and properly.
I love that. So in your entrepreneurial journey, I'm curious, after 20 years of finance, lending, now capital, what's the single most important action you take on a daily basis that attributes most to your success?
It's a couple of things, right? So for me, and I'm very methodical about what I do. I'm very detail oriented about my steps and what I need to do, task oriented, right? So those are the things that kind of all fall in. But I'm big on having a plan and having a game plan of what I'm trying to do, right? I'm trying to accomplish. I'm a sports guy, athlete growing up. There's a lot of competitiveness in me, and all that kind of side all kind of builds in. But I'm big on having that methodical workflow of what I need to accomplish. It gets a little crazy at times because I like to map everything out at times, but I do, right? I have my routines where I get up, not so much anymore. I've, kind of drawn away from it, but I used to, for years and years, I would wake up at 4:30 every morning. The only reason I did that was because when I was trading Forex years and years ago, I was an early guy. And then I remember reading a book of some Navy SEALs. I'm sure that's this big thing out there. And he would always talk about waking up at 4:30 in the morning, start your day. So one day I decided that's what I'm going to do. Started to get up at 4:30, work out, read, organize my thoughts for the morning, and then execute on my plan for the day. Right. And I've been big on that and you know what, a lot of times we fall and we don't get to certain things, but having that knowledge to say, you know what, I failed today, right? I didn't get to accomplish the things I needed to do. Let me reshuffle that and reattack it tomorrow. But having that methodical, daily grind of the things that I need to do and the things that I need to accomplish. I'll throw another thing to it. And I know you said one, but it's also mentorship, having somebody that you can talk to and having somebody that has some experience and be able to share some ideas with. That's invaluable.
Couldn't agree more with the mentorship. That is so invaluable. And waking up at 4:30 in the morning is just cool nowadays.
Not so much anymore. As I've gotten a little bit older, not much older, but a little bit older, it's 6 o'clock now, just because I felt like I was kind of wearing myself out, because the 4:30 works if you go to bed early,
Yes.
But I don't. I was still staying up till midnight, 1 o'clock working, and then I'm getting 3 or 4 hours of sleep a night, which I'm good with. Yeah. It does take its toll after a while.
Absolutely. And my biggest fear as a business owner and entrepreneur is burnout. That's my biggest fear.
It is. And it is. And it's tough because, I do a lot of, I'm big into like the leadership and kind of mentorship myself. And now that I've been through this a few times and, built some organizations and done some successes, if you will, right? I like to kind of be able to give that back to some people and talk to people and mentor them and, do some coaching and whatnot, And it's one of the things that I always talk to business owners. And I know it's a common phrase, but it's working in the business of breaking down your business, right? It's what's your exit strategy? We're good salespeople. We're good executors of our task and our job, right? We're selling either properties or selling mortgages or, vacuum cleaners, whatever it is you're selling, right? We're good at it, but you can't sell your whole life. At some point, you need to be able to hand it off or build something enough where this business can continue on and you can go play golf or go surf or whatever it is you want to do. But it's tough because, I'm that guy where I like to control everything, right? I'm doing things day in and day out because I know I can do it and I know I'm good at what I'm doing, but it does take that that know-how and that knowledge to be able to say, look, I'm going to let go a little bit and delegate some tasks and grow my organization so that, I can accomplish the things the bigger picture in life that I want to.
That's right. Because are you living to work or working to live? Right.
And it's a very, it's a tough thing, right? Because as entrepreneurs, that's what we want to do. We want to outwork everybody. We want to, there's a meme that I cut and pasted or posted a while back, and it said, I gave up my 9 to 5 for a 24/7. Right. So, and it's like, right. I don't have a 9 to 5 job because you're kind of always working, but it does take its toll and it does wear you out. And it's, where's that balance between, your work and your life and your family and all the other things that you want to do.
That's right. So nowadays for your company, you've been doing this for 20 years. You probably have a good book of referral business, but how are you generating new business? Are you doing any types of lead generation that are interesting? What's your digital presence look like? I'm really curious to hear, like, what's your percentage of referral to new business? Yeah,
that's a good question. And it's one of the things that I've kind of prided myself on over the years when I was in the banking side in the corporate world, teaching sales, right? One of the kind of the principles that I've always taught is your activities, right? And it's what your money-making activities are, what your sales activities are. And I've always told people, I don't care what activities you do, right? Because if you're good at it, you're going to generate business, but it's knowing your numbers, right? It's knowing your qualifying, what's my percentages, what's my success rate for certain activities, and then doing that activity the right amount of times, right? If you're going to telemarket and my success rate on telemarketing is 2%, well, I know I got to make 100 phone calls to get two deals, right? Because that's your success rate. But the guys who say, look, I'm a telemarketer, I have a 2% success rate, but I make 5 calls a day, right? You're never going to achieve those numbers because it's a numbers thing, right? So over the years, we've done all kinds of pretty much activity you can imagine. The first mortgage company that I went to, so here in Southern California, would do a lot of radio advertising. So we were, phone guys, and we would answer the phone. It was mostly inbound calls, but it was expensive. When I decided to go out on my own, I wanted to do that. Didn't have the resources to do so, but I still wanted to make the phone ring, right? I still wanted to make the phone ring. One of the first things we did, and it's actually a funny story, not many people know about this, and I'm not sure why I'm going to say it, but I'll go ahead and share. We did an outbound campaign. It was myself, and I think I had 2 sales guys working for me at the time, where we were trying to do a mailing campaign, right? That was the premise, but we didn't have the resources at the time and actually sent out the mailing campaign. So what we did is we called the homeowners that we were targeting at the time and said, hey, I'm calling to follow up on the mailer I sent you. No, well, knowing we never sent a mailer, right? And we would say, and they're like, well, I don't think we ever saw it. And our response was, you know what? That's a common thing. Most people just toss our thing in the mail, toss it in the trash when they get something in the mail. Let me tell you what it was about anyway. Right. So we've done that. Eventually we got to radio advertising, and we did very well with that. And it's pricey and it's expensive. I used to have a radio call-in show on a Spanish radio station where I answered phone calls live, a couple hours a day, and just, spoke to people about mortgage. Now we've transitioned more into more of a digital space, right? Where it's not my strong suit, but I do have a team behind me that can help with that dramatically. We're getting out into the social atmosphere. I've created an online persona and you guys can follow me at The Casual Executive. And that's, one of the things that we push out there. We're out there growing our social media presence with podcasts like this, doing different things where we also do a lot of email campaigns. We're branding and we're just trying to expand our presence. And to answer your question, I think right now we're probably about 60-40, 60% new lead generation and 40% referrals.
Awesome. Yeah, that's a solid percentage of new business through different types of lead generation sources. And I am curious, based on the digital stuff that you mentioned, that new wave, are you doing paid advertising or is it all organic? Up to this point, it had been all organic. We just launched our first paid campaign actually this week, or on Thursday or Friday last week, I believe it was. It was kind of a venture into it, which is it's a small test. To make sure our systems were in place to do so. One of the things that I've learned over my career is I've had big organizations. At one point I had 150 people working for me, call centers, just answering the phones and doing all this.
the second generation that I call it now, second time around, doing it a lot different, right? We've outsourced a lot. We've, putting together different systems and tools in place where my human capital is a lot smaller, but I can bring in higher quality people to execute on different tasks where a lot of the systems, there's a lot of technology out there now that can take place. A lot of the things that can be time consuming or draining financially on your budget, right? So we just launched our first digital campaign, paid digital campaign. And then we're creating some more now that we saw that it worked, that we knew how to make it work. It's not easy, right? There's a lot of little tricks that you have to know how to do, right? It's your target audience. What's your reach? What's your mile radius? What's your this? There's a lot of little tweaks that you have to do. And we have one of the guys on my team is an analytics guy. So what he does is we're just trying to get data to him and myself, because I'm a numbers guy too. And him and I just crunch that data and figure out what's that best approach.
Yeah, absolutely. So you're running that in-house right now, that first campaign?
Right now, it is all in-house. Yes.
Congrats for taking the leap and doing that. It's
a little bit out of my comfort zone. The team that I have is a lot younger, and they're savvy with the social, and they're savvy with this and TikTok and whatnot. And, a couple of weeks ago, they were like, yeah, we need you to start filming the reels. And I didn't know what that was at the time, and I was like, oh, let me do a little research. And, so we haven't done one yet, but it's in the works. We're trying to do some videos and try to post some stuff on the social platforms to try to build some more organic following. That's
awesome. Yeah. And I got some ideas for you. Maybe we could chat after.
But that'd be great. I'm always open to ideas, because that's definitely what I lack in. But one of the things that I've learned over my career is I'm smart enough to know that I don't know everything. Surround yourself with good people, surround yourself with people that can pick up I don't want mirror images of myself, right? I want people who can fill in the gaps, because there's a lot of things I don't know.
Yep. Right? Absolutely. Absolutely. And it's so critical to surround yourself with people that are better than you in certain areas of the business. So yeah, that way you can one day escape it, like you said, and walk away and still have the organization run and grow without you. So,
what our big goals right now is we're trying, and I'll say this as a very proud dad type moment. My son, who's still in high school for the last year, has been interning with us and trying to learn the ropes, and he's helping us with some of our marketing stuff, and we're trying to teach him different tools and things. And he's excited, and Dad, how does that work? And how does that sales part of it work? I heard you explain this to the borrower. Can you explain that to me? I'm not saying that he will take over the business. I don't know. It's premature to say, but it's a very proud thing to see somebody picking up some of those things and be able to say, look, maybe that is my exit strategy. Maybe that is my opportunity to hand something off, and kind of a legacy type thing. So that's been fun. That's been one of my funnest parts of my career the last year.
That's awesome. Yeah, get your son's feet wet in the business, and of course, you have grand visions of him taking it over, but you also understand he's just starting out. Might not be what he wants to do. So
he may, like it doesn't say, he may definitely hate it, which is fine. And I'm never going to push somebody into doing it.
Yep, absolutely. What are 1 to 3 books that have greatly influenced your life or career?
All right, that's a good question. And I won't reach now, but I carry. There's this little paper that I carry in my wallet, and there's 5 books on there that a mentor of mine, maybe 8 or 9 years ago, maybe 15 years ago, gave me to read. One of them, Career Warfare. I'm not going to remember the authors right now, but if you look them up, that's a fantastic book. It teaches you how to navigate the corporate world, but it teaches you how to brand yourself and how to become indisposable, right, for your career. And I've taken that in different aspects of whatever venue I'm in. Right. Another one, and this is a classic that I know everybody has always touched, is, Rich Dad, Poor Dad. Not necessarily for his way of investing, right, but just for teaching us that there's a way to look at things, right? There's a difference of how you can approach, and it's that having the mentality where what you say to yourself matters, right, and how you see yourself matters, and that has always guided a lot of my decision making into what we do. Right. It's one of the, I'll segue into this and I'll get back to another one. But one of the things that right now we're working on, and it's getting ready to launch, and you've alluded to it a couple of times, with our own fund and raising capital. It's one of the biggest reasons that I have to launch that fund is to be able to expand the opportunity for younger people to be able to invest in something. Right. These big funds, these opportunity funds have always been around for a long time. 90% of the people who've always invested in them are already millionaires, right? They're already accredited investors who have, this is just part of their portfolio. And they just dump a couple $1 million in because they need somewhere to park it, right? And it's fine. That's, hey, look, they can send me their money and I will put it to use all day long. But I have a passion to show some of the younger millennial generation or some of this younger generation that there's a way to invest in real estate without necessarily having to go, they're like, I don't have enough to go buy a house and flip it, or I don't have the know-how to do so, right? And where I have a 401k at work, but maybe I have, my savings, 30, 40, $50,000 set aside that I have something with. And usually these funds have not opened up that opportunity for, right? One of the things that we're doing is we're lowering the thresholds on our minimums of what people can invest with us, so that we can show the younger generation how to build some wealth, show them that there's an opportunity to grow your portfolio in a different aspect without having to go out and buy the real estate, right? And that's one of the things that, it's right. I mean, literally, I got news yesterday that I need one more signed document and the SEC will approve our fund to go live probably in the next, 7 days. So some more announcements coming to that pretty soon, and we'll be putting some more stuff out there with that.
By the time this podcast releases, it'll be live because it'll be live.
So yesterday we went live. I'm trying to think of another book that's been instrumental. There's a lot of them, obviously, because I that's one of the things that I love. I've found very important is just the reading aspect. And I'm drawing a blank right now, to be honest, of another one, but it'll come to me in a minute.
No, that's all right. So it's easy to be blinded by the success of someone else, or you get caught in the comparison and the envy that comes naturally when you are hearing something of someone that's ultra successful and has done something that you want. It's easy to kind of go there first and get blinded by their success. But in my experience, there's all kinds of failures and learning lessons behind the scenes that no one sees. So just to kind of anchor it back into reality, I'm curious how a failure or an apparent failure has set you up for later success. Do you have like a favorite failure of yours?
I actually really do. It's in my career, what I talked about, back in 07, 08, I thought there was a time where I thought I was on top of the world. We were doing the crazy numbers. We had, 150, 200 employees. You name it, it was just, this was a different era, right? Market crashed. I had two partners at the time. I owed my warehouse line, and in lending, you borrow, you have a credit card per se to fund loans, which I'm responsible for, right? We fund these loans, and once you sell the loan, your warehouse lines gets paid back. I owed this warehouse line in excess of $25, $30 million. And the banks that I sold these loans to had gone out of business. Wow. So I had no place to place these loans. Right. And then you sit there and you have to renegotiate. You do something called scratch and dent, where you're selling them at a discount. If it's $1 million loan, somebody's giving me 600,000 and I'm like, all right, I'll take it. Who's covering the difference? I am, Right. So you do that. We did that for a while to try to get out of that hole, take losses of, $5, $6, $7 million, and once when you were here one day, now you're here. Right. And we ended up shutting down the business. Not necessarily, we were still able to continue it, but it was more the partnership had just kind of broken up at that point, and it was not repairable. So we decided to walk away where we could still be friends, and there was things we're not going to get, bad. But I went through almost a depression where for 6 months I wouldn't get out of the couch. I wouldn't get up. Didn't want to do anything. I was just so disillusioned with the business, and I did not want anything to do with the business.
Right.
And again. And I keep bringing up this word, a mentor. Somebody came into my life at that time and they said, look, you've done it once. The second time around is going to be easier, better, and you're going to do it the right way. And it breathed life into me that I didn't feel that I had. And I was all of a sudden, it was just this fervor inside of me to go out and almost a chip on my shoulder because I had something to prove, that I said, you know what? I did it before. I'm going to do it again. I'm going to do it better. Right. I'm going to do it, in a different way. I'm going to do it with different components, different variables. One of the things I talked about before is also having the right support, right? Sometimes, I don't know how many times I've been told, especially in those hard periods of life where, why don't you go get a real job? Why don't you go out and do this? Why don't you go out and do that? Right. And for an entrepreneur, that's like the ultimate, stab in the chest, stab in the back, all of the above, right? It's like, you're told that you're made to believe that what you're trying to do is not worth anything, right? But then having the right people behind you, the right support, the right cheerleaders, the right people to tell you, hey, you know what? I'm proud of you. I appreciate what you're doing. I know you can do it. Let's go out and do it together, right? And having that support, it's invaluable. I mean, at my age, looking back, I can look back at times in my life and I'm just like, without having those right people there to give you that kick in the butt, it doesn't work, right? This business doesn't work. We drain ourselves. We put ourselves through everything, right? To get those results, but it's really draining, right? And sometimes you need to get refilled and you need somebody to support you, right? And it's very difficult to find those right people.
Yeah, no, makes total sense. And the support group is really key. I appreciate you sharing more in depth about that time and around the recession. I mean, I had friends that were in lending early, like 18, 19-year-olds making more money than they could ever imagine. They had their own house, that, they had their own mortgage companies. They're just killing it. And then all of a sudden, bam, everything is gone. And to have that experience, you said you started the company at like 24. So this happened at some point in your mid to late 20s.
Correct.
Gosh, how crushing, right? And so I really appreciate you sharing that. And then now showing like, you can come back from that. And what your mentor said during that time, it's so key. And I feel that the universe, God, higher power, whatever you believe in as a listener out there, puts people in our life at certain times for a reason. And that person obviously was, just a gift from whatever higher power you believe in to say the exact thing that you needed. And I love that line. You've done it before. You could do it again, except you'll do it better. And I kind of paraphrased it, but yeah, it's so true. And when you come out at the second time, you've been seasoned by the pain and and you're no longer quite as optimistic, which, can be a benefit or a negative, but at the same time, you know what not to do. And that is everything.
It is. Sometimes it's that Monday morning quarterback, right? To be able to look back and analyze some of your mistakes, because it's in business, right? These cycles are going to come and go. We're going to come across the same situations again, right? And being able to have some knowledge to be able to, go back. Yeah, back then I was, 24, 25 years old. I didn't know anything. I thought I was pretty smart and I had a good head on my shoulders and I surrounded myself with some smart people. But now I can say, look, I've been through hell and back. Those decisions don't scare you as much. It does make you a little gun shy, I will say, at times. Because you do sometimes second guess yourself, and then you can say, look, you know what? I can vet this out because now I know what are the potential outcomes, what are the potential pitfalls, and how am I going to get past it?
Absolutely. So as a finance guy, I'm curious, what's one of the best or most worthwhile investments you ever made?
Oh, that's interesting. That's a fun one. That's a real fun one, right? Because as a finance guy, real estate, that's what everybody's going to talk about, right? It's real estate is the number one investment. And as much as I do agree, and I do agree that those investments are the most important, a couple of reasons why, right? It's real estate it's collateralized by a real property, right? It's value of the property, even if it may go down, the cycles will always pan out and it always outperforms most of the markets. But I'm going to change it up on you and I'm going to say the biggest investment is in yourself. That's the best investment you can do because knowledge and experience, learning, that's going to help you make the right decisions to be able to invest in the right vehicles that make sense for you. Because, I talk to people every day and I have this, I talk to a lot of guys and we're all, hey, it's the crypto, it's Bitcoin, it's this and there's that. I have my reservations and we can talk about it if you want. That's not necessarily, my specialty, but it's, so I always tell people, there's real estate, there's mutual, there's a ton of different investment vehicles, but what's right for you is different, right? I'm not the licensed finance guy, investment guy to give that advice anymore. So it's always creating the right investment vehicle that's right for you and your risk profile, right? Set that up properly, but invest in yourself so that you can make those right decisions. You have the capital disposable when the right opportunities come around. And right now, the markets we're in, where it's like, look, everybody's, trying to buy real estate, which we've gone through different cycles where people are buying property. But if you weren't liquid or you didn't have access to capital or to cash, you could have thought that's a great investment opportunity, but you could have never done it.
Right.
Right. So it's sharpening yourself to be prepared to capitalize on any and all opportunities that you come across.
Such a great point. And I was telling a young buck who kind of looks at me like a mentor. He's in his early 20s and And I met him just through surfing and friends in Southern California. And he's like, I want to have a conversation with you about finances and IRAs and all this stuff. It seems like you got a lot of that stuff figured out. And I was like, look, man, it took me years to increase my financial literacy, and it was a conscious decision to do so. So I applaud you for having the courage to ask. And we finally had that conversation last night.
Oh, really?
Really fresh on my mind. And, some of the things that you mentioned were exactly what I told him. Like, the right investment is the one for you. You got to understand what you're investing in, first of all. Don't try to go chase after something because someone else is saying it's the greatest thing since sliced bread.
Yeah.
Because like Warren Buffett's big quote is, when everyone in your plumber is saying to get in, that's when you sell.
Exactly.
It's too late.
Yeah. And that's exactly what I was going to say, right? When you hear about this investment that everybody else is doing, it's too late. It's the price is inflated already.
Yep.
Right. So,
but when there's blood in the streets and everyone's saying the sky is falling and nothing's ever going to come back, that's when you buy.
Yeah. And you know what? And there's money to be made in every market.
Right.
It's the old Wall Street quote, bears make money. Wow. I totally blanked out. I'm not going to get into it because I'm stuck at quotes, but I totally forgot the quote already. It's, there's opportunity to make money in every market. Right. Sure. It's just don't be greedy about it. And it's follow the path that's right for you and your investment profile. Right. We don't know everybody's finances. You don't know, like that guy who was talking to you, he's fresh and maybe he's got a little bit of money saved up and he wants to do something interesting with it. And maybe he's got, his risk profile is a little bit more because, he maybe lives at home and he doesn't have a lot of the responsibilities a lot of us do. Right. So he has an opportunity to do some stuff. Right. But it's not for everybody.
One story that I told him, which is exactly in line with what you mentioned, is your most important investment is the investment in yourself. I told him, it's a couple of tactics and savings minimums that I had learned from like Dave Ramsey back in the day. Mm-hmm. I graduated college like most people with some debt, right? And so I was like, man, how do I get out of this? And I remember researching how to get out of, credit card debt or, student loans, this and that. And it came up with Dave Ramsey's like 7 baby steps. Mm-hmm. And so it's a great little blog post. Like if you haven't seen it and you're struggling with some of those similar things, I highly recommend checking it out. But a couple of the things that I told him was like, $1,000 is a rainy day fund. It's not a lot of money, but like if you're young and your brakes go out on your car, you don't want to put that on a credit card. You want to have the cash on hand because you're trying to pay down those things, right? And so like that's that little baby fund that is just for rainy days. And then when it depletes a little bit, you replenish it right away. Now, after that, your next goal is 6 months of your monthly expenses. Whatever your overhead is, right? If it's $2,700 a month, because you're living pretty inexpensive in Southern California as a early 20s, post-grad. Cool, round up to $3,000. Now you need $18,000 in savings to just be a catastrophic, like, hey, if you lose your job, if you get hit by a car, if things go totally wrong, you have a 6-month runway. And then the next goal is 12 months and the next goal is 18 months, right? But I told him, when you have that cash on hand and then you want to go buy a house and do a FHA loan with 3.5% down, well, that might only be $15,000. And now you have the cash for it. Yeah. And then you can replenish that savings again, but you have that cash. And then I told him, this is what wraps it all together. That was my experience. I did these baby steps. I had about $18,000 in savings. And then I had an opportunity to do a coaching and consulting program that cost $10,000. And I had a very clear point in my life where I thought, I can either invest this in my first home, which it was going to be a down payment. I was looking at getting pre-approved, had the letter and everything. I can either do that or I can do this, make more money and get a better place in 12 months or 24 months. Like fully repay myself back and then some, because I know that this is valuable. And I believe in investing in myself. And I chose the latter. I chose to use that down payment for my first house for coaching and consulting and just double down on myself.
Yeah.
And I've gotten, multiples returned based on that initial investment. So I couldn't agree with you more on that.
Yeah. It's so true, right? We all come opportunities where I know in my career I've done that, where it's, you can stay at this job where your salary or you can take this other job where, maybe it might be a little bit more pay, but less opportunity, less experience. right? And if you stay here and you take the lesser of the two, theoretically, right, there's a bigger growth and bigger potential. And maybe 6 months, a year, 18 months down the road, you're going to be in a much better spot. Right. So it's being able to take some risks on yourself, right? To invest in yourself and believe in yourself that you can accomplish those things. Right.
Absolutely. Absolutely. So I like to ask this question because it helps me to understand where other people, decide what to say yes and no to. So what's your process for evaluating what to say no to?
That's a real good question, because that's one of the things that I've struggled with the most in my career. It's being able to say no.
Yeah.
Right. For a long time, being able to say no to deals, just like to loans that came across my desk was the hardest part, because I wanted the competitiveness that it's like, oh, you've been turned down by 25 other lenders. Hold on, I can get this done, And then I realized that I would leave 10, 15 deals on the table because I was spending all my time and resources on working on this one transaction that possibly could happen or could not happen. Right. So that was one of the first things that I had to kind of tell myself. It's, how much is my time worth? What am I going to put into this? And what, where is my time better spent? Right. And most of my decisions, to be honest with you, nowadays come to that, is to time, because my time is a finite resource that I don't have a lot of lately. I need to make time for my family, my loved ones, things that are a lot more important for me, right? At this stage in my life, that's the investment that I'm making in myself. When I was in my early 20s, even early 30s, I didn't do that well, and now in my early 40s, it's, those are the things that are more important for me. So it's, my kids are in high school and, they're getting ready to fly the nest, to leave the nest soon. So when I have the opportunities, my son's in band and he's playing the drums at a competition, I'm going to drop everything and go there. My daughter, a couple weeks ago had homecoming, to take her dress shopping, and I was that dad taking pictures and doing that. And that stuff is important to me. Right. So it depends. Saying yes or no, has a lot to do with my time and my resources. There's a value to my time. And that's usually how I'll usually use that to make my decisions.
I like that. Yeah. One of my mentors told me to divide the amount of money I made last year by 2,000. And that is my hourly rate. Simple formula, because it's kind of can get convoluted if you're like, well, I closed a deal and it only took me an hour to have the paperwork signed and do the final walkthrough. And so
I know.
You're like, I made, $15,000 an hour.
I'm pretty good.
That's not it. That's not it. Right. You divide it by 2,000 and you could even do more, because 2,000 is based on 50 weeks, 40 hours a week, taking 2 weeks off. Most real estate professionals are working 60, 80-hour weeks. You might divide it by 3 or 4,000, and probably that's your hourly rate,
yes.
Right? That'll be more accurate, so that now anything lower than that, you can afford to outsource. But it's an accurate number. It might be $60 an hour or 30 or whatever your transaction volume is based on how much you're working. But now gosh, if I can start to outsource some things for 10, 20, 25, even 30, if I hate that thing and it's equivalent to my hourly rate, right? But now I can go focus on increasing that hourly rate by being more effective and productive. So key. So
it's like you said, it's efficiency, right? I learned that one from a manager I had a long time ago. And he said that. He was like, you're doing a spreadsheet task that, we can have a hourly person doing, right? Your hourly rate is a lot higher than that hourly person, right? Go out and do what you're called to do, and don't do that. Another guy told me, another mentor of mine said, because, our job, we do get a lot of emails, right? And you get bombarded with emails. And sometimes I sit here for 6 hours and just responding to emails. Yeah. And it's like, responding to emails is not your job.
Right.
Right. I didn't get into this business to be a good email responder. Right. It's to go out and raise capital and to create opportunities for people to make money. Sometimes those emails can wait.
That's right. 100%. Is there a question I should have asked you, or anything that you'd like to elaborate on from earlier?
No, I think we've kind of covered a lot of it. Right. And so no, not any questions I think that you missed.
Cool. So how can listeners contact you?
A couple ways. You can reach out to for our organization online at www.jssfinancial.net. On socials, we're at JSS Financial all over the place. For me individually, I'm at BryonEnriquez.com and at The Casual Executive on all the socials as well.
Awesome. I love that brand, by the way, The Casual Executive. Look forward to following. I will link below to Bryon's different links that he just mentioned, and really appreciate having you on.
I appreciate the time. It definitely eye-opening experience.
Oh, well, thank you. And, I really appreciate having you. Bryon Enriquez, offering lending, very interesting capital opportunities for investors doing flips and doing different types of either multifamily or single family investments. So I'll definitely be in touch with you, if nothing else, as another capital partner in my investor network. So really appreciate having you on. Thank you.
Thank you. I'm looking forward to it.
Thank you for listening. If you want to accomplish your real estate goals, then I highly suggest downloading my free Ultimate Real Estate Goal Setting Framework. The link is in the description of the show, and it will help you break down your annual income goal into the amount of phone calls, appointments, or open houses you need in order to achieve that goal. Thank you so much, and we'll see you next time.